Hello guys, we are starting our Euro USD analysis and we want to show you where price is going. So when we go to the monthly time frame, we realize that we have what we call a bearish movement under the time frame. But realize you have to think of the now, where the market is operating from, which is here. Market was creating here a resistance and here a support. Market was coming here, taps here, comes back, taps here, comes back, taps here, comes back. But later market broke this level by a full body candle, and then sellers were weakened by this candle, then buyer came in. Remember, once support gets broken, it turns to resistance. So the chances of the market coming back to retrace to it are very high, then it continues downwards. But this is a monthly time frame, so we cannot wait for that. We have to look for ways to join the movement to the retracement. So we look forward to this order block that weakened the movement at first and buyers came in. So it was like, I would say, a demand zone that got weakened. Then we use a gun box to get the 50% of its retreat of its position, because it's a very big candle out with a wick, and realize that the 50% will do for us what we want. So we remove this and we lock the line and we add text as monthly resistance, and you say okay. Then we go to the weekly time frame. We have locked our line, so we realize that previous week's market was coming to retrace this level in order maybe to continue downwards, but still there is a chance of it gets broken, because in the forex everything can happen. So we go under the daily time frame. Under the daily time frame, realize the market is forming a certain curve. It's moving here. Remember, what happens on the lower time frame happens on the higher time frames too. It's moving like this. So, which confirms our analysis that we think the market wants to retrace this level. Then we get back to the under the daily time frame, you realize that the market is forming some sort of trend line. So when it's forming a trend line, it's like a trend line, but we can confirm it on a bearish trend line, but we can confirm it on the lower time frame. So let's go to the lower time frame, which is the 4-hour. Under the 4-hour, realize the trend line now becomes clear. Market came here, retraced back, came here, went back, and came here, went back. Then yesterday it broke this level. When the level was broken, this was a supply zone. Realize this was a supply zone whereby sellers were in position, because the market came back here. When it reached this level, it went down, but there is a demand zone here that showed some strength whereby buyers came in and pushed the market high. But remember, the trend line has been broken. So when the trend line gets broken, we see here the market was broken. This broke the market, creating an inefficiency. So this one now becomes a demand zone, since price broke it. It came back retraced but created a demand zone. So when we go under the lower time frames, which is the 1 hour, you realize the market is coming back down to retrace and continue upwards. When we go here, which is when we see a break above this zone, which is this, it's like market is coming here, then it comes back here, then it will tap here again, then it will continue here. That's my prediction, what I predict the market is going to do. But if the market dares comes here and breaks it, it will just retrace on this and breaks and reaches here. So let's wait for that and see. This will be a short-term trend if it gets broken, but if it gets here and breaks this level, it becomes a swing trade. Thank you. Have a blessed day, darlings. So you can be coming checking here every day. I drop some gems every day, so hope you enjoy the movement.